BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's get started having a think about Bitcoin, and I suppose we can look at traditional markets, but definitely crypto is the emphasis on its own price action, given the FUD which is spreading like wildfire across Twitter about exchanges, and it's just madness anyway. So like I said, I won't get particularly worried about it. The size of the move after the lawsuit, and then the bounce back, and then the rejection, all based on the TA. If we just look at the size of the channel basically still facing down. We're above the 200 simple moving average and exponential. So there's your simple, there's your exponential. On the daily, each one of these is a major area of support, like a super major one, right? I know that the simple moving average is way below the channel, and it's, based on the TA, you'd not expect it to break out, down below this channel. And we're expected, really, if anything, just to trend within it. So that, again, another retest of the lower 25,000s, talking 25,300 easily, and maybe even a little lower than that, maybe 25,100 easily. But based on what we see at the moment, but on the 4 hourly, daily, or whatever, we do have that 26,650, we'll call it, which is that area that was held for quite a while. We tagged down into the bottom of the range, then bounced right back up to the top of the range. On the 4 hourly, moving averages all trending down. We have reclaimed the Bollinger Band for the moment, but the Bollinger Band is still facing down. We got a retest of your 200 simple moving average and exponential. You can call that a death cross retest, just another death cross retest. The death cross took place all the way back over here. So again, moving averages and horizontals all being respected. So that was a major area, 27,250, and we came straight down through the 26,500. So 650, sorry. So at the moment, basically, we're just trending. That was a decent rebound all the way back up, and a perfectly fine rejection. Now, what we'll be looking for really at this stage now, if you want to flip bullish, would be to get and close above 26,650 again. You do that, especially if it takes, for the next 24 hours, we get above this 50 exponential as well, which is currently sitting a little higher than that. The peak of that moving average is 26,731. So there's not much between it, in terms of percentage, fractions of a percent at the moment, but it's downtrending, so we'll see it get lower and lower and lower. Closures above there on a 4 hourly, definitely good. On a daily, even better, and we didn't get that on the daily yesterday. In fact, we moved up, we got rejected and closed below it, and recognized that we're below all major moving averages. So just similar to how I said, there's two ways to think about this playing, right? One would be the descending triangle fake out and breakout. Second would be the continuation of the descending channel. This falling channel can continue to fall for as long as it takes. I project this 200 simple moving average on the daily to get towards this channel by the end of the month, giving us like a major support by the dip kind of area around the end of June. So 3 weeks from now or so, we could still trend within here. Like I said, there's no crystal ball. There is a number of ways that this one could play out. We are downtrending anyway, which is normal. We're in a falling channel, which is normal. These often break out, so it's just a consolidation waiting for a breakout later on down the line. There's nothing particularly bullish on this chart right now, but the criteria will change if we can get above 26,600 or 650. And even better than that, we reclaim the Bollinger Bands as well on the daily. This looks like it could break out from there, but right now, not really. Again, all crypto is going to be tied into this Bitcoin problem. Now, if we just move over just briefly to the traditional market scenarios, we've got the euro, which did have a little bit of a move yesterday, the last couple of days has been trying. There's your 200 exponential on the daily, which has been held quite well. We held over here 3 times in a row and then a bounce. We've been holding here almost every day, but rejections effectively either on the top of the range or the 10 exponential. So we're really in a descending triangle formation here. Momentum is turning up, and so there is enough evidence to suggest that we do push back up to the top of the range, which is around 107.6, and maybe a rejection from there. Closures above here would be very bullish for euro, and we'd actually see a decent rally, continuation of the rally. The 4 hourly is neither here or there really. This would require closures a bit higher towards 108 to break super bullish on this one. The odds are in favour of further upside towards the trend line, but other than that, there's really not a great deal to it. You know, if you want to try and trade this based on 4 hourly pump signals, itchy clouds and whatnot, then yeah, you're going to have to wait and see if we can close above 108 basically, and that's what it would be like at the moment. You know, a little bit less and less and less over the next over the course of next week. But for the moment, yeah, a mini uptrend. I reckon that basically shorts ought to stack around 107.6. The reason we're talking about euro basically is because the correlation between euro to Dixie is so incredible, and you'll basically see the exact opposite take place on the Dixie. So we're not really seeing anything particularly bearish. We're seeing sort of subtle downtrends with a potential move towards 103.2, which is, again, is really nothing. Daily, again, you'll be looking for the supports around 103.6. So yes, there's nothing to see here that we haven't already seen on the euro chart. And if we just go to S&P futures, yeah, we're trying to move back up again to this 4,300 zone. Yeah, break above there, we could entertain a fair move higher, to be honest with you, 4,600. And for those who think that this can't happen, this is a strong chart, no bearish divergence on this chart, so this is a decent chart. There is every reason to expect that a move like that could happen. I'm not here to say that it will, and this is a resistance until broken out from otherwise. But look, yeah, people are reckoning that stocks are going to crash. They've been saying that for ages, and all we've seen really is a continuous rally from the area, which I said was likely to be the bottom, and it's just continued on and on and on. A series of higher highs, higher lows, higher highs, higher lows, and divergences of moving averages. So everything looks quite good for stocks, to be honest with you. And you know, that is the redeeming factor as opposed to anyone's portfolio, really. If you have crypto portfolio, you have stocks, shares portfolio, at least you can sit back and go, well, at least, you know, Meta's up 100%, or, you know, AI is up 200% or whatever. It's not all bad. It's just bad for crypto in the short term. But, you know, at least everything else is working out quite well. Crypto is going through a bit of, we'll call it teething problems teething problems to say the least. But yeah, crypto is having a bit of a problem. However, you know, I still believe in the overall trend of Bitcoin, which is that we are looking for a rinse and repeat market cycle, and this is quite early on in the market cycle. This is the equivalent of over here, and what we're seeing now is a consolidation similar to here, and basically we will likely be sideways, you know, for the most part. We could run up a little higher into the 30s, maybe even 38, but look, for the most part, this is going to be the market cycle for crypto. It's going to be in a sideways range for basically a year or so before we break out properly. That would coincide with the way that inflation looks to come down. That also coincides with a range of other problems that ought to be old news by then. And so really, if you're looking at this on a weekly perspective, it's really nothing scary. It's exactly the same as it always is, and the same as we sort of expected it to look like. It's exactly the same as I expected it to look like. It's an absolute rinse and repeat. Now, you're talking about entry points based on long-term positions. I mean, we are sitting more or less at one. That's your 200 weekly moving average. Just below that is a 20 weekly, which is around 26,200. And below that, we've got 25,900. If we lose all of those, then we do go down to this area, just around the 24,250 area. Again, long-term pickup. Dollar cost average into all these zones. There's a lot of support around us here, as well as the range that we're in, this descending channel range. But I'm not here to say that this is where we get supported from. We recognise that Mr. Burns is out to get us at the moment. So yeah, just be skeptical about how these supports will hold up if continuous FUD falls into the system. But if anyone is around in the last bull market, there's plenty of FUD. There's always FUD. It's always FUD. But the TA always prevails, right? And if that is the case, then you consider all of these dumps that are here and that are likely to come as opportunities to dollar cost average and build up a Bitcoin portfolio, build up a build up your, well, stack your sats basically. As for altcoins, you do have to have a leap of faith to want to stack those in this environment. However, I still believe in the overall rinse and repeat. It's nothing that we haven't really seen before, although it's all in a different name. Now it's the name of regulation. And I was saying this at the end of the last bull market. I said, look, this bull market is going to be governed by regulation. It's going to be a regulatory bull market, which will encourage institutional money to flock in once all that has been cleared up. So to be fair, it's actually a good thing that it's all, that they're ripping off the band-aid now, and they're going to get it sorted one way or another. So if you decide that this is areas to buy from, educated guess to think, well, it's going to resolve in favor of crypto. I can't see how crypto is going to go anywhere, is it? They're just going to try and build a regulatory framework. And the SEC are probably going to leave with egg on their face as well. So, like I say, a leap of faith is required to be buying altcoins at these low levels. But it's faith that keeps us going. When we think about rinse and repeat market cycles, this one really does look no different as far as Bitcoin is concerned. It's behaving exactly the same way, so we should expect it to resolve in the same way, which is not a fast resolve. We're talking later on down the line. We're talking a couple of years before you can realize those big gains. Right, I'll leave with you there. Like I say, short term, keep your eyes on the price. 26,650. Reclaim that would be good. 27,000 even better, and then we'll be looking for an immediate continuation, I would imagine, to take us up into the 30s. Outside of that, right now, we should just effectively expect the channel to resolve between now and the end of this month, which is the more likely scenario. But again, invalidation and validation points, focus on the 26,650 area in the short term for some form of pump and immediate continuation. Right, thanks for watching. Hope you have a nice day. Take it easy.